doing short-term rentals today. We had to pivot a little bit. It was going to be on building your bench of like who should be in your wealth advisory panel, things like that. So we are still planning to do that, but I did not have time to get all of that content together, ready for today. So we're gonna do short-term rentals instead. I also forgot to include the disclaimer slide. So, disclaimer, we're not professional,
We're not CPAs, we're not attorneys, we're not financial advisors. We are real estate investors, and that's why we're up here teaching this content. So if you take any of this as legal advice, tax advice, or financial advice, that's your fault, not ours. There you go. Disclaimer.
Alright, let me see if there's anyone else I need to add. More note takers, I'm not too worried about those, so we're gonna skip those and moving on. Alright.
So why short-term rentals? I'm curious, has anyone in this room or on Zoom ever thought about owning or starting a short-term rental, an Airbnb? I'll raise my hand. Buffy, you wanna raise your hand?
No.
You own a bunch of them, so.
I have not thought about having any more.
Any more? Okay, all right, that's not what I asked, but that's okay. All right, short-term rental, so it's of interest to people. But why do short-term rentals instead of long-term rentals? What would be the advantage?
I think I heard in one of your classes that they were better. That was a while back. That was like back in the summer or something. I don't know.
Okay, well, I mean, better is
Subjective.
subjective. Yes, very good. All right, so higher income, yes, potential for 2 to 3 times the normal income that a regular long-term rental, or even more, depending on the uniqueness of the property, the location. Dynamic pricing. So, in got more people joining. In a long-term rental, your rents are fixed, right? You sign a 1-year lease with somebody, you don't get an extra bonus when Derby season comes around, all right? So your rents are pretty much fixed. In dynamic pricing, we can price differently for the different seasons, for events like concerts. September actually in this market is our best month because of the Bourbon and Beyond and Louder Than Life. It's actually busier and higher priced than Derby, believe it or not.
Really?
Wasn't always that way, yes. Derby, when we first started doing this, was in this area was a higher price point, and now the concerts are a much higher price point than Derby. And they're 100% booked, whereas Derby, this last year with the 7 that we had, we're not all booked.
Really?
For Derby. Yeah, we had last minute cancellations. So dynamic pricing's an important feature that short-term rentals offer that long-terms don't. Flexibility, you can block dates, like Buffy, you own one out by Patoka, so you can block it when you want to use it. Most of ours are operated as a business, so we don't block it unless we're doing maintenance or something. We keep them open all the time.
Like Market, yours at Market, we block for a Thunder Party that we use
That's
for
right,
a different
for a
business.
team event. Yep. And then dual return. So you got, just like a long-term rental, you have cash flow and you have appreciation over time, okay? One of the things that I do, one thing on that appreciation over time is, who owns any long-term rentals in here? Or who's ever thought of owning long-term rentals?
I'm a midterm.
You're a midterm guy,
Yeah.
okay. There's similarities in midterm to short-term that don't always equate to long-term. What I find in having a property management company with long-term is they can get pretty beat up. You get the right tenant, it's well taken care of. But you're not in there every day. You may be in there once a quarter at most, checking on the property, but with Airbnb, you have cleaners, maintenance, your property manager stocking it. Someone's in there all the time, and so your properties actually are maintained at a higher level because you're always checking on them. Okay, so that's a good thing. Hello, Linda.
Hi.
All right, so we're talking about short-term rentals today. So come on in.
Hey, Rob.
Yeah.
Would it be possible to kind of define short, mid, and long?
Yeah, absolutely. So long-term obviously is something where we all understand you're probably going to put a 1-year lease on or more. And you have one tenant that's going to be there for a period of 1 year or greater. A midterm rental, and this is where it gets a little iffy. Cause that could be a weekly stay, it could be every 2 weeks, it could be a monthly, it could be someone that's there for 3 months. People think about like, travel nurses, using, the opportunity for midterm rentals, cause they're usually in and out in like 3 months at that job.
I guess.
I've had those, I've had, professionals that come in for consulting, and I've also had a lot of people that are waiting for the houses to be built.
Yep,
Yeah.
we've seen that too.
We see a lot of construction workers at different parts of the country where midterm works, and they actually do like a rent by room. They'll take a house with 3 bedrooms and turn it into 3 rental units. And they'll operate it as a midterm because the cleaner goes in once a week and cleans the common spaces. And then the guests are responsible for their own spaces, and they might be there for a month, 2 months, 3 months, depending on how long the job is.
Do you have a co-living one like that?
No, we don't.
Oh, okay, alright.
We don't. I've helped clients buy those properties
Yeah.
and then sell them because they didn't wanna do that any longer, so.
Okay.
And then of course, short-term rentals is nightly stays. In our area, it's nightly stays. We do have certain times of the year blocked for like 3-night minimums around derby time, stuff like that, or concerts. But there's a lot of markets, like Florida, we use that as an example, where they only allow monthly or weekly stays. And they'll still be marketed on Airbnb or Vrbo, but the local, area may not even allow nightly stays, right? So that's the difference between them. Anything else I missed, Chris?
I would say just in my head, when I think midterm, I think anything 30 days or longer.
30 days
so
longer.
30 days to like 6 months is kind of what
Yeah.
is in my head when I think midterm.
Okay.
Because if I were doing a week to week stay, I would still consider that a short term.
Yeah, I think most people would consider that short term. Alright,
Alright, moving through what makes short-term rentals different. If I can get my slide window, here we go. There we go. Alright, so short-term rentals are a hospitality business, so it is not just purely a real estate investment. So while you may know everything about real estate investing, it may not help you be successful as a short-term rental owner, because you also have to know about hospitality business. Okay, so the success is gonna depend on the guest experience. If a guest has a bad experience at your place, it is going to tank your reviews and is going to tank your ability to get future guests. So you can't just lock in someone for the rent, collect the rent, and call it good. There's a lot more to it. So unfortunately, platforms like Airbnb, they only showcase 5-star reviews, and anything less is considered a punishment. So even if you have a 4-star or 3-star stay, which in normal markets you would consider, hey, that's average, places like Airbnb actually penalize you for anything under a 5-star. And then you also have to showcase design and amenities. You do have to think about what is going to make your place stand out among a scroll of, if someone's looking for a place to stay around Louisville and they've got 75 options, what is going to make them want to choose your place over the other ones? And then lots and lots on the operations side, efficient management, making sure you have someone checking on that property, that you've got cleaners. I will also say there's a very, very big difference between operating one short-term rental that's like close by to you and you kind of self-manage it, or operating 9 or 10 or anything really greater than 3. It requires entirely different operation structure. Because what you can make work for just one, you cannot make work for 3 or more, when it comes to cleaners and things like that. So.
alright, so benefits to the community. So, well-managed, short-term rentals don't just benefit investors, they can benefit neighborhoods versus like a long-term rental that might sometimes get a little run down, or you don't always control the people that you have in there and what they do to the property. With short-term rentals, again, we mentioned earlier, you're gonna have someone there quite often, so it might help bring up the value in certain neighborhoods, revitalizing homes, bringing in, different people to the city to see the local area and potentially end up being homeowners in the area. Boosting local tourism. So short-term guests stay longer and spend more money locally. It's like, kinda like hotels, right? You have a hotel in the area, they're helping bring in money to the community, from people outside the community, whereas a long-term rental doesn't do that necessarily. Supporting local businesses, like we have a book in all of ours that, highlights certain restaurants, certain businesses. So we're promoting local businesses as part of our process. And then again, property improvements, typically if you're going to buy a house that becomes an Airbnb, it's gonna be maybe the best house on the block. Because if it's not, then you're not gonna attract the clients.
Yeah, I'll go on a little soapbox here for a minute because
Please do.
I do live in a HOA neighborhood, and I ranted and rallied and raved against the HOA who wanted to put a moratorium on short-term rentals in our neighborhood, because everybody's perception of a short-term rental is that it's going to hurt the community. And they have no idea, when you have a short-term rental, just the standards that you are held to keep good quality guests in there, or you are not going to have very many guests at all, because all it takes is one bad experience and your business is going to tank. So I think if HOAs and neighborhoods really understood the process more, they would never be against having a short-term rental in their neighborhood. And I see that over and over and over again, as HOAs are like, no, we don't want a short-term rental here. It's gonna, make it be a big party mess, and that's really not
And that may be more true in like tourist areas like Florida, where if you have too many homes with Airbnb guests and not enough local residents, that might take away from the local community. But an area like Indiana or Kentucky, that's not necessarily the case.
So if you are in a community or a HOA and you hear that come up, then please do speak out. It will actually help your neighborhood, not hurt it, in my opinion.
Yeah.
So that's my little soapbox.
Better than long term.
Much better than long term, right? Because there are a lot of really, really bad landlords out there. All right, benefits to your team. So short-term rentals, you need collaboration. This is especially talking if you have more than one. How many do we have? 9 altogether under our umbrella, run by different people right now. So if you are looking outside of an area, or you're not a real estate agent, it's going to help real estate agents who are gonna be able to help source deals and find them for the community. Helps designers, stagers, things like that. It can help your contractors, property managers, and investors. So these are just a few of the people that a short-term rental could benefit by actually employing them and giving them a job. So,
Benefits to investors, all right, well, 2 to 3 times more revenue, all right? So if I have a property, let's say we have one of ours in downtown Jeffersonville, for example, right? It's a 3-bedroom, 2-bath house, probably rents out at $1,500 a month, all right? Thinking about 704.
for long-term,
Chestnut, for a long
Yeah.
term, yeah, alright? If I was to charge, anybody have a calculator?
Got a
Exists.
smartphone.
So that one runs about $225 a night, right? And when, the goal would be to be able to purchase that property that's gonna have about a 65 or greater % occupancy. So we'll say 18 days out of a 30-day month, okay? So take 18 times 225.
4,050.
$4,050. The same property that was $1,500 is gonna generate $4,000. Now that's a average nightly stay, that doesn't include concerts, derby, things like that in the local community. All right, that's like a base number for 704
Do you
Chestnut.
think you're being conservative with having 18 nights full?
we are always trying to be conservative.
We'll get to that.
Okay.
About how that's changed in this market, okay? And yeah, when we first started in this area in 2022, we were getting 75% occupancy. Now we're seeing more in the 50s
Okay.
as far as occupancy, all right? So we'll talk about why that is. Great question though. So now, yes, there are more costs, we'll get to those numbers as well. But generally, more revenue, you can generate 2 to 3 times more revenue. You can target a higher cash-on-cash return. And it is a scalable model, just like owning long-term rentals be a scalable model. It is a scalable model. It doesn't have to be a one-off. You don't have to think about short-term rentals as, oh, I'm gonna operate just this one. If you can figure out what your team looks like, you could operate multiple. And honestly, in the long run, having, say, 50 short-term rentals versus 50 long-term rentals, if you build the right team, will be more income, will be more profitable.
What is the target return mean exactly, 20% exactly?
Oh, 20% cash on cash in this case. So let's say you bought a property and you put $100,000 down, okay? So you're gonna bring in a net income for the year of $20,000. That would be a 20% return on your cash.
Okay.
All right, so if you, and you know, and there is gonna be more cost because you're gonna furnish it. You may do premium upgrades to the property in order to attract
Yeah,
guests.
first year you're not gonna make a lot, I guess.
Well, not necessarily, but
Maybe not, but you might also be able to if you can find the right deal. Right? There is more, I think, upside potential here if you're willing to put in some elbow grease and, cause furnishings and all that, you'd be surprised what you can buy. I mean, we're talking about the queen of resourcing things
Yeah.
and reusing things. You know, through thrift stores, different things that people love because it tends to be eclectic or something like that in terms of attracting people to return to the property.
yeah, like my cabin at Patoka, I mean, it's gorgeously decorated, everybody loves it. And I think the only thing that I bought brand new were like the linens and the mattresses, and everything else is completely
That's what I
The
sourced.
towels and everything else, all used.
The linens, all of the linens, all of that is new. So those types of things.
Is
I
it a
would
fair
go to
statement
state.
that, I'm sorry, go ahead.
No. Go ahead.
Is it a fair statement though, when you go, decide to go resell, that short-term rental is gonna be in much greater shape than it is when you have a long-term tenant in there, it's destroying the house every day?
Yep, absolutely. Because, I think you weren't in here yet, but we talked about the fact that someone's gonna be visiting your property a lot more often than if it were a long-term rental. You have cleaners going in there, you have maintenance going in there, someone's restocking it, the supplies in there on a regular basis, so yeah, the amount of times you're gonna visit that property are 10x or 100x what you would visit a long-term rental in a lot of cases, yeah.
Could that possibly be because they feel like that if they mess something up, that there's gonna be more of a penalty? Like, if you were in a hotel, would you feel that way? Like if I break something?
I think the majority of people, yes. There's always those people
yeah,
out there
absolutely.
they don't care, it's not their property, they're gonna destroy it, alright? And that is a challenge with this as well, we'll talk about that.
But isn't it also have to do with, if they live there all the time for a couple of years, it feels like theirs and they feel like they can do anything they want to do it. Versus if they're just staying in short term, it doesn't feel like theirs, that they're gonna take care of somebody else's.
Right.
Kinda.
And again, I think that's just a personality thing because, and I know like Brian and Belinda, you all have had probably some great long-term tenants who really took care of the property like it was their own. You know, I mean, having all the doors that we manage, we have people, we walk in and we're just like, this is cleaner than my house. This is spotless. And then there's other ones where it's like, these people do not care because they know they're renting it, they know they're here short-term, and they're gonna destroy it.
And I will say,
Challenge them.
Like that too. So-
I know, that's the way they live, right?
Yeah.
I mean, and if they owned it, they probably would live like that anyway,
Yeah.
right?
and I would say out of our 9 properties over, how many, 4 years now, 3 to 4 years for the majority, we've
4
had
years.
less than 10, probably less than 5 truly horrible messes to have to clean up in the short term.
And usually that was some type of party
Yes.
where they just didn't care, or they said they had 8 guests, and they brought in 20 guests. And it just looked like a herd of elephants went through the house.
Yeah,
right?
so it's all about screening, so we've learned some of that along the way of questions to ask and things to screen.
Like not to rent to locals.
Yeah, things like that.
You know?
Okay.
Alright,
There are exceptions to that, but generally as a rule, you don't auto confirm showings, even though the algorithm likes it if you do.
yeah, they try to get you to set instant book, we have instant book turned off on all of our properties,
We
and it
learned
will
that in the
always
first
be
month
turned off
of doing
on all
this.
of our properties.
No more instant book. 'Cause the first time you have a pot party in your house, no more instant book.
Well,
So,
and you said not to rent to any locals, because that means 99% of the time, that means party.
Right, unless they can give us a legitimate reason, like if we say, if
Yeah,
they
it's
say,
probably
hey,
7 or 8 out of
you know,
10.
my
if they're
house had a
home.
plumbing leak or something
Yeah.
like that, and I
Yeah.
need.
I'm doing a remodel
place to
project,
stay.
like I stayed in Airbnb locally,
Mhm.
and they weren't gonna let us stay there.
Yeah.
I had to show that I had already hired a contractor to work on my house for a week while we refinished the floors, and we stayed there for a week. And it was in downtown Jeff, and that was during COVID, 2020. But they, you know, that's what we would do as well, we would just screen the person to find
Okay.
out what's the reason, can you prove it, right? And we probably err on the side of caution when it comes to disallowing locals to stay.
Are you doing very good with I've sold my house, I need someplace to go to, find my next house,
We have a number of those, the problem is our houses tend to be larger.
Yeah.
And so most of the
Meaning more
people,
expensive.
yeah, so we have to have it rented out for usually a minimum of about $3,500 a month. And people who are looking for a in-between place, like
Yeah.
sometimes that prices it out. Like sometimes they're willing to go a little bit above what normal rent would be, like maybe 2,000 instead of 1,500 or 2,500, but 3,500 a night kind of
Cause if you rent
stops some
long
of
term,
that.
you're giving discounts that come out to about 20%. And the reason we come up with that $3,500 number is because that would equal a certain number of stays at a certain number, that's gonna get us to like a 15% cash on cash. If we rent it out to them for less than that, then we're really taking away the opportunity for the property to be successful. To
So-
make the kind of money we think we can make.
So for most of ours, like all it would have to do is rent out 8 nights, like each weekend night to make up what that long-term guest would be there for, so.
is that a
that's why.
market that needs to be filled? Or is there a market there?
It's hit or miss, right? And it's somewhat seasonal, right? Now Angie, she has one in Corridon that she will intentionally block out anything 2 months, is it 2 months?
I think she blocks out anything over 30, she
Anything
only
over 30
opens,
days.
yeah, she only opens it
So
up 30
our
days
calendar
at
is
a time.
open up for the whole year. When we started doing this, they only opened the calendar for 6 months. But now they open up for the whole year, which creates challenges we'll talk about. But like some people only open it up for a month to capture those long-term stays. And I tell you, where we get more of those than anybody, through insurance companies. If an insurance company who manages like fire and risk
Fire
and
and
water and flood, if they know that you're doing that, they will call you first and say, we have somebody, and they will definitely pay more.
Okay, what about right then?
What about it?
Is that an area that would be even considerable, whether it would be for insurance or obviously probably not for,
More so towards insurance.
but not for, oh, this nice Airbnb, let's go stay there, but not a great neighborhood.
Yeah.
Okay.
You gotta think about return. We have a lot of people that would come back every year for the same event, and they wanna stay in your Airbnb. If they didn't like the area, they're not gonna come back, right? So there's way more regulars in Airbnbs than you think. Hotels, same thing. Restaurants, same thing, right? These businesses rely on repeat return clients. Airbnbs will do the same thing. They'll rely on repeat return clients. So if they don't like the area, if you don't think the area is supportive of it, then it's probably not. Right?
Right, it's not, but it would be for a burnout or something. I
Unless
think.
the yeah, exactly, unless the location offers something that other places don't. Like we get that, like 431 West Market, right by the bridge downtown. You know, we think, okay, well, people are gonna complain about the noise and whatever else because it's right by the interstate. Nobody complains about the noise. None. Occasionally we get somebody wanting to make camp where the state police set up underneath the bridge down there for Thunder Over Louisville.
Mhm.
A homeless person will try to make camp over there and they will complain about that. That happens like once a year. But the police are good at taking care of
Cleaning
that
it
for
up.
us, right? But even a location like that, no one complains. They love the location because what are they in town for? You know, if they're gonna stay at a hotel, they're gonna be near the interstate anyway, right? So they like the convenience of an Airbnb and the privacy, and it's only 5 minutes from downtown Louisville.
So are you getting a premium for Thunder? At that
Oh,
point?
We block it out for Thunder because we host our tea party.
That's right.
There. We do get a premium for the concerts, we get a premium for Derby, quite a bit. I
Yeah,
mean,
a lot.
whereas your nightly stay might be $250,
Mhm.
Derby will be $1,200 to
Yeah.
$1,800 a night.
Wow.
Yeah, for about 3 to 4 nights.
That's enough to pay for 4 months and,
Yep.
It is, that's exactly right.
yeah, that's good.
And when those don't book out, then you're like, uh-oh, it's gonna be a bad year. Cause you're kind of booking on, it's like Christmas for the retail outlets, right?
Yeah.
If you have bad weather in December and people can't get out and shop, that's a problem.
Oh, okay.
Alright, so let's talk about first step. If you are considering an Airbnb or VRBO, anything short term, the first thing you need to do is you need to research and know what the rules are for that area. So short-term rental use is not permitted in a lot of areas, like that's what I just said about HOAs and things
Mhm.
like that. New Albany
New
now
Albany
has
currently has a moratorium on new Airbnbs.
Yep,
Too
so,
many.
We didn't even, we own several there, we didn't even know that, they just pushed that out last year and, you know, they're not really great at telling people that's true. So I'm sure there are
How do
people.
they
who-
monitor it if they're not involved in the registry?
People turn them in. Yeah, there is no, I mean, New Albany a couple of years ago started this policy where you had to pay $5 every year to
Yep.
have a long-term rental. We sent the $5 checks in and they never cashed it. There's nobody to cash the checks.
well, we are also in a not normal Airbnb market. So a lot of Airbnbs and vacation markets have very different laws and ordinances, so it just depends. Are you considering owning a short-term rental here where you can physically be by it?
Yep.
Are you considering one that you want to use as a second vacation home when you visit it? So like Rob, you were looking at one maybe in Florida
Yep.
that you could run, it would pay for it, and then you could use it.
That's correct, yeah.
Things
And
of the
I'll
year.
tell you about so that was in Sarasota, Florida. And so there's Bradenton and Sarasota. All right, Bradenton and that county will allow nightly stays. Now, there could be HOAs in neighborhoods that don't, but that county has no restrictions on Airbnbs in terms of nightly stays. If you're in Sarasota, in the city, you can do nightly stays. If you're in the county outside of the city limits, you can only do monthly stays.
You say that's one you're looking at or already got?
Looking at.
Can you have it ready, available tomorrow?
Probably not, unless you got the money for the down payment.
I love Sarasota.
Don't say that too loud.
It's a great place.
All right, did you go through all that stuff?
Yep,
Oh, well, that was
I went
good.
through fast. I go through mine a lot faster.
Except for you on the soapbox.
Yeah, well, alright, your turn, go.
Okay, all right, local regulations matter. So in Jeffersonville, a couple of years ago, they proposed a moratorium on, short-term rentals, and they said, no moratorium, but you have to register them now. And it's, I think, what was it, $12 or something like that we had to pay?
It
Something
wasn't much.
stupid. And so we registered all of them, and then somebody from the city, as soon as I sent the email, submitted the form, he calls me and says, tell me about your Airbnbs. I said, they've been here this long and we rent out nightly, and okay, thanks, have a nice day, send the check here. That was the approval process.
So
Couldn't get me off the phone fast enough.
Why did they have a moratorium first then? What was the reasoning to have moratorium versus just doing that?
Well, again, like I said on my earlier soapbox, I
Yeah.
think there's a lot of disinformation out there,
Yeah,
and
for the city.
so people are just like, oh no, these are bad, we don't want these here,
Yeah.
and they don't actually know anything about what it takes to run it.
All right, I have some numbers for you.
Okay.
So
Imagine.
Clark County, excluding Sellersburg, I don't know why it's excluded. All right, so AirDNA, we'll talk about that as well, is a place where you can research information about Airbnbs or short-term rentals if you're interested. AirDNA, it's a company based in London, and they basically collect data from Vrbo and Airbnb and Bookings.com and other sites like that. And so when I started doing this in 2021, they're in Jeffersonville, which used to be I could search by the city or the zip code, and now you can't do that. They do it as a sub-market of Louisville, which means it's all of Clark County minus Sellersburg. In Jeffersonville, there was 94 Airbnbs in 2021. Today in Clark County, there are 363 Airbnbs as of today, all right? In New Albany, there were 64 Airbnbs when we started our very first one in June of 2021. A year later, when we were trying to buy Culbertson, right? There were 128 Airbnbs. I don't know why I remember these numbers, they just stuck in my head.
Just
There was 128 exactly 1 year later in New Albany. Today, The submarket is Floyd County, plus Sellersburg, plus most of Harrison County, not all of it, and does not include Georgetown. I don't know. Yeah, 285 Airbnbs in that market.
Not
Right?
that many.
Quite a bit different than just a few years ago. I mean, you have doubled or tripled in some cases, or even more, the amount of listings for Airbnb or for short-term rentals. And I can promise you the demand has not increased that much. So that's the challenge we're facing, right? So, but local regulations matter. And I use the example of Sarasota versus Bradenton. If you don't live in the area where you're looking, you should hire a professional real estate agent who specializes in Airbnbs, who's gonna stay up on all the changes, right? Because you buy one, that's the risk I take. If I buy one in Florida, the laws could change the next week.
Or at
Right.
very minimum, a real estate agent who has one of their own,
Yeah.
even if they don't work with a whole bunch of them, if they have one of their own, they'll still know.
So you've got to worry about HOAs, you gotta worry about cities, county permits. You gotta look at nightly stays versus weekly stays versus 30-day stays. And then, there are some there's a condominium building on Mulberry in Jeffersonville. You know what that's called? Williamsburg? No. We had a listing there last year. This big unit, 3-story building right across from the park in downtown Jeffersonville. There are only allowed to be 2 short-term rentals in the whole building at any one time. My client, there was already 2 in there. My client's like, hey, advertise it as a short-term rental. And I said, well, that violates the covenants and restrictions. He's like, I don't care. Let that be the next person's problem. We didn't end up doing that. We lost the listing. But yeah, that building itself said you could have 2, no more than 2, and there were already 2 in there. Right? If I had even tried to list it and there was only 1, someone in the time I'm under contract could have started one and nixed the whole issue. No reason why someone's buying that property, right? So, challenges, right? So finding the right market.
Alright, so the best opportunities are not always in the most obvious places. So what we found here was we needed to look for the demand gaps. Okay, so out of those 374 ones that are
Not even
available.
close to it right now, but it's okay.
That's okay, that number. Look and see, how many of those are 2-bedroom? How many of those are 3-bedroom? How many of them, how many do they sleep? And what is missing? So, as a majority, all of ours, the ones that are consistently good performers are the ones that are very large houses that sleep like
10 or more.
16 guests
Yeah.
or more, because there is a shortage of those available.
Yeah.
So ours, if someone is searching for a large group of people and they're looking for 16 people or more, ours is one of the only ones that comes up. So we have one in Jeff, we have one in New Albany, and then we have one in Michigan. And those 3 are some of our best performers.
Yeah.
Because they're hitting that gap in the market. So you also want to look at that type of demand research.
And so AirDNA, we mentioned earlier, is a place where you can go find that information out, right? When we started first doing this back in 2022, as a group, in New Albany and Jeffersonville and Louisville for that matter, because we also did look in Louisville for a little bit, which I would never do today, just because of
All the rules,
all the
extra
rules
rules.
with the city. Yep. 2.1 bedrooms was the average of all the properties out there. And it told you, like, this is the gap. Like, and that 2.1 bedrooms slept an average of 4 people, right? That's just like a hotel room, right? Now think about this, when you talk about finding the right market, this is your slide, right?
That's fine.
Okay, so there are, in my opinion, there are 3 types of short-term rental markets, right? We are what I would call an interstate market or a hotel market, right? Your competition in this market is other hotels, unless you're by Lake Patoka, right? Unless you are offering something that hotels simply cannot offer, right? You have something unique, but the majority of our Airbnbs in this area are competing against hotel rooms. There's about 26,500 hotel rooms in the Louisville metro area. You have to be more valuable from a cost perspective or an offering perspective or both amenities than those hotels, all right? So if a hotel sleeps a room sleeps 4 people, right? And it costs $200 a night, and you have a house that sleeps 6 or 8 and is only $200 a night, well, you're already more valuable than that hotel room, right? So even with the cleaning fee and stuff added on, because those are already factored into the cost of the room in the hotel, right? And then you have what we call regional travel markets. How many people have been to Gatlinburg? All right, so Gatlinburg, Tennessee is a regional travel market. So it does not attract people from California or from Colorado, but it does attract people from the Northeast and from Florida. Everybody kind of merges on Smoky Mountains, right? So that's a regional travel market. And then you have places like Florida, or
It's international.
that's international, yeah. But we'll just say that it's the vacation market itself. It's a pure vacation market. You can go to Florida, and yes, it's a populated state, but half the people there at any one time are there for vacation, right? Not true of other places, right? So those are the 3 types of markets. So know your market and know the seasonality of your market, know what you're close to, know how you're gonna attract people.
What kind of situation right here would charge, you want a large group situation?
Yeah.
So we get a couple of them. We get people that are in town for local events at the convention center. So like people who are bringing a gymnastics team or a basketball team, or, a large group of young athletes that are doing something. We get a lot of those. We also get a lot of the construction workers that are working around because they would rather put up their 6 guys or 4 guys and have them have a kitchen and a living room and place to relax than paying per night for all of their guys at a hotel room.
Yep.
So-
Travel sports, though, in Louisville is a big deal. Because of the Christian Center, there's a lot of travel sports in the Midwest because people can kind of merge. Just like Indianapolis, Louisville, those are central parts for the country from that convention standpoint. And these people that have travel sports, usually the families will get together and say, hey, let's all go rent a house together. Put all the kids in one room and the adults in another couple rooms. It's a lot cheaper than a hotel, and then they can have a party and whatever else, hang out in the backyard.
They still good renters though, as far as that?
Usually, like I said, we haven't had too many too bad ones.
Yep.
But we also need to know that in our marketing for our Airbnb. So we always have to, when we're marketing, market our proximity to some of the big convention centers and things, because those are the search terms that people are gonna look at. They wanna know, hey, how close are you to the Young Center? How close are you to the Expo Center? How close are you, so we need to address all of that in our
Bourbon Trail,
listing.
we actually pick up a lot from the Bourbon Trail, even though we're in Indiana.
Yep.
Interesting.
Is there any difference in the, Airbnbs, like when we go to Austin, we have that place and it's for, conferences and things of that nature, but it's for business people type?
Yes.
Like what we rent in Austin, is that a demand, or is that just something
It's-
that all blends the same?
That's kind of the same as like another hotel room, right? They're wanting you to have the privacy of a Airbnb, but it's, you're talking about those 2-bedroom luxury condos we stayed in.
Mhm.
Yeah, that's just, think about that like a hotel room, right? So if it's a better deal, great, but sometimes it's just the privacy that a hotel doesn't offer.
Okay, plus kitchen and
Yeah.
whatever, but.
Yeah.
But that is that a separate, totally separate market, like that place in Austin that we stayed at?
Probably, I think it's kind of like the hotel market though, like what we have in this area, right? But think about Austin as it being a bigger city, like kind of Nashville, Tennessee. They have a lot more events on a regular basis, on a weekly or monthly basis that attract people from, really around the world, right? Being like a music city, things like that. So I think they're probably gonna have a higher occupancy, more so than what we have in this market. And people probably just, they're gonna come in, they're gonna stay for a week or 2 weeks if they're gonna be in town for some of those longer events. And they don't wanna do it at a hotel. Like you said, they have a full kitchen, but they just have privacy. I think privacy really matters for some of these.
And then the other thing, is how you can stand out. So what's unique? So a lot of unique stays will book entirely different than a regular one. So like you can book a tree house at the Red River Gorge and you're gonna pay a different premium price for that than you are for just a regular house. There's lots of listings around Patoka, but mine's a cabin, so people are sometimes more likely to stay in a cabin than they are at some of the other places. So things that make you stand out. 100% professional pictures matter. Anything that you can highlight that's unique.
Like an accent wall. Or-
Yeah, we try to do always something outdoors at ours. So whether we have like swings around the fire pit or shade sails that just make it look bright and colorful, something that's going to stop the scroll basically from all of the white and gray living rooms and kitchens that you see in 90% of the listings, right? What's gonna make yours look different?
Yeah, it's not real estate. You're not selling real estate, so you don't have to show a picture of the outside of the house first.
Okay.
It should be a picture of the most interesting room in the house or an outdoor space, like what you said.
Right, or have it decorated, like a lot of them are fun because they are themed or decorated kinda crazy, and like people actually like to stay in a place that maybe doesn't feel like home, it feels more like a vacation experience if it does have some very unique things about it. So
do you all decorate a lot in the Bourbon Trail stuff, since you get a lot?
we have one that's our one, in downtown Jeff, our big one, that one's decorated in like a steampunk vibe with horses and things like that. So that one's a little bit different, it's a Victorian, so we did steampunk, you know, accents and things in that one, but it's just kind of fun to find a little bit of different, unique things.
And it's okay to pay someone to help you do that if you don't have that ability, because I don't have that ability, right?
That's the only fun part about having an Airbnb. I don't like any of the rest of it, but I like
to know.
decorating them.
Alright, so research tools, we definitely have already talked about this. So AirDNA, Rabu is a new one that we haven't ever used, but AirDNA's been around for quite a while. You can actually, so also good research is just go look at your competition. Go look at Airbnb and VRBO, look at the city you plan on operating one in and see what's out there. See what your competition is, see what their nightly stays are. You can, like an Airbnb, if you go to booking, like you're gonna book a stay, it'll allow you to kind of walk backwards into their calendar. And you can look forward into the future because AirDNA is gonna show you what's happened in the past, all right? As far as number of stays, things like that. You can also look forward, if you can get into the calendar to a degree, to see over the next few months, this property that's in the same neighborhood that I wanna buy in Florida, how many nights is it rented out? Oh, it's rented out 50% of the time in June, and right now it's March. That's good information for me to have. What I can't say for sure is, does the owner have it blocked, or is someone staying there? So I would wanna see proof of that in other houses in the neighborhood, that they also have similar bookings, like 50% in June, for example, in March. Then that would tell me it's probably not the owners, it's probably people actually staying there. But if it was a one-off, then I'm
Or
gonna
if
discount
it's
that.
managed, like you can tell the ones that are managed by a company like Evolve or Vacasa or whatever, and those ones, probably owners aren't actually staying there. So if you're looking at ones like that, those probably are legitimate bookings.
Yep, okay. So, if you get into, the next one, which is understanding comparable properties. So, again, this is where I'm just gonna go straight to Airbnb and Vrbo, and I'm gonna search. What are these charging per night? Make yourself a spreadsheet if you really wanna go the extra mile. Look at what they're charging per night, per weekend night, if they're having like a 2-night minimum on the weekends and a 1-night minimum through the week. But look at the price per nights, and you can go month by month or week by week, depending on what's going on in that area. Occupancy rates, that one you have to almost get from AirDNA or Rabu. They'll give you the ideal there. You can also just use ChatGPT. It does give you some information it can pull, not from these paid sites, but it is getting information that seems to match what I'm seeing in other research. So for example, in Florida, prices are still really high in Florida for buying in these Airbnb markets, but the occupancy rates are generally like 85 to 95% still today. In our area, when we started doing this, the occupancy for New Albany was 64%. right? And we were hitting 75%, because the way I think about it is, we are doing something better than most people,
It was
right?
also during COVID year where people couldn't do a lot of their normal vacation travel,
Yeah.
and so their only vacation options were to do some Airbnb type
If
things.
your area is like a hotel area, then you can quickly Google search or ChatGPT search, what are occupancy rates for hotels for the last couple of years, right? Because whatever the hotel trend is what Airbnb trends are gonna be. So right now, hotels are running in the mid-50s, or mid-50s as far as occupancy. Guess what Airbnbs are doing across the country?
Mid-50s.
Same thing, mid-50s, yeah. So we've seen it definitely at last year when we looked at the numbers, we were seeing probably low 50s as an average. Some of ours are in the 40s, and those are typically the ones that are bigger, like the Victorian you mentioned, that
Yep.
sees 20 people. We only need that one to run about 30% occupancy to break even. So at 40% or 45%, it actually makes us money. But some of the ones, like we have Culbertson in New Albany,
That is
we can
almost-
run 65% occupancy just to break even on that property. Cause if we raise the rates too high, we don't rent it out. Raise them too low, we rent it out. You rent it out too much, you don't end up actually making money.
What,
Right.
Culbertson Mansion?
It's near, it's on.
It's on Culbertson Avenue.
Oh, on Culbertson, okay.
No, we did by Culbertson.
Yeah, but that one is consistently like our worst performer, and it has the
But
highest
highest occupancy.
occupancy out of any of them, because it's
It's
so
tough to
hard to
find the
get the
balance.
right nightly price for that one. And then we'll be sweating bullets sometimes, because like the Michigan one is a huge house that sleeps 20-some people, and like,
With one bathroom.
well, 1 and 2 halves. But that one won't have anything, and we're like, oh great, this one's gonna be really expensive, we're gonna be paying this mortgage for a while, and then all of a sudden, a long-term stay will be in there for 2.5 months, and
Paying a premium, like
Yeah, paying like-
$6,000-7,000 a month.
yeah.
Where y'all
So-
at up there?
Battle Creek,
Oh, yeah.
near a lot of old cathedrals and
Mhm.
Kellogg and Post Zero and all that stuff.
Yeah, but usually we get more
And
work
there's a
crews in
casino
there
up
than
there and
anything.
golf courses and skiing.
And weddings, we get a lot of weddings for
weddings.
that one.
Okay.
Where the one bathroom comes into play.
Alright.
So what I'm hearing you saying is bigger is better, but not necessarily.
Well,
Yes and
bigger-
yes and not necessarily, yes.
Yeah, I mean, from our research of our 9, the bigger ones have outperformed all of the smaller ones.
With less effort, honestly, because they don't rent out as much, right? So, and when they're not occupied, you don't have to really worry as much.
So you need, if you're having
Things don't get broken as much.
if you're having a big one, you need to run it and see if the numbers make sense if it only books out on the weekends, because generally that's what happens with those. So they're only booking Friday, Saturday, Sunday, so does it
Makes
still
sense with
make
the sports
money if it's only booking the weekends and not at all during the week? And you might get some weekly stays, but most of those are just weekends, and as long as the weekends book, we make money on those every time.
So, and a lot more times, we'll have to book that like a 2-night minimum on the weekends, because if we only book a 1 night on the weekend, then we kinda lose the other day. Like, no one else is gonna book the other day.
So you
But our
reject
other
it?
ones that are smaller,
Yeah.
we can definitely rent those out 1 night.
We put
at a
it
time.
in there that we don't accept anything that's not a 2-night on the weekends on the big ones.
You can set it up automatically where it's not even, it'll show up as not available if they're trying to book 1 night. Alright, so, other types of comps, so you got the nightly stays, bedrooms, baths, how many people it sleeps, occupancy ranges, right? So that's where you're gonna do your research. You rely on your own ability to do comps in real estate, you'll be fine here. Go ahead, click on the next one.
Okay.
And then sold property, alright? So why this matters is, well, you might need an exit strategy if the rules in the city change, right? So you wanna buy something that has, potentially you're gonna, Gary Keller always says you make your money going in, right? You make your money when you buy. Same thing is true for short-term rentals. You have to have an alternative. Can it be a long-term stay? Can it be, and still make you money? Will you be able to sell it, at a number that makes you money if you have to back out in a couple of years, right? And this, let me tell you, this is like threading what's the expression?
Threading a needle.
Looking for a needle in a haystack?
All of those work.
It's like, I don't know what you're trying to go for here, but.
This is challenging, more than we thought it was gonna be, right? Because right now, we've got properties that are that are making money, right? 10%, 12% return on the cash that we put in initially. And for our passive investors, that's great because they don't lift a finger, they just get a check every quarter, right? But for us, it's a lot of work, and it's like, okay, where else could we find that kind of return? And we look to sell the properties, but because of the market we're in for real estate, maybe we've only gone up 2% or 3% or 4%. And the cost to sell them, just like if you bought a house today, if you're gonna live in it for 5 years, you're fine, you're gonna make money, right? But if you bought a house and you're gonna have to sell it in 3 years, the cost to sell it is probably gonna offset whatever money you could have made in the property. Same thing's true here, right? So we look at what it would mean to sell our properties that we have every single year, sometimes multiple times a year, depends how frustrated she is. And every
Once a
single
month, like,
time,
sell 'em all.
it makes more sense to keep operating them from a profit standpoint than it does to sell them, at this point. But again, we're just now,
Where the market's heating up a little bit.
April 28th will be our 4th year for our first one that we did collectively as a group.
And you did what, I'm sorry?
That we bought as a group, as a syndication, we did our
Okay.
first one, which was 704 Chestnut in April of 2022. So,
How do you feel about destinational, Airbnbs that you go there for not that area, but that location?
Like
such
by
as-
Disney or something like that?
Well, like my farm, the horse farm that I'm getting ready to list.
Yeah.
And 200 acres, 7-acre farm or lake, and horses and all that as a destination, only come there, and that's what you're doing.
so here's the challenge there I see, is you have to be a marketing expert. Because
me out.
people in Texas that are thinking, I wanna go on a vacation that has a unique experience. So what are their options? They can go be a cowboy or cowgirl on a farm in Colorado. They
Mhm.
can go fishing at a lake that's really well known and rent a cabin on Lake Cumberland or where he's going. You got an Airbnb down there, or a hotel? Airbnb? Airbnb, and he's going fishing for crappie in Alabama, later this week, right? Or you can go to Florida and you got Disney World like that, right? But how are they gonna know that you have that in E-Town? Unless you market the hell out of it.
Cause I mean,
And then you get repeat. And you're marketing to corporations that wanna do corporate events there. So you are not just able to put that as a listing on Airbnb, because people that go to Airbnb aren't looking for that.
aren't looking for that.
They're not
So
looking
that's-
At
to
least not
spend
at that area.
$20,000 a night, or
It's
whatever
not
it
gonna
is.
pop up.
So that's
as a
a
normal
different,
area.
a whole different ballgame.
Yeah,
I mean, he did 250,000, 200 nights a year,
yeah.
as a destination. And I'm trying to figure out what to do with it, at that point.
I would ask him who his clientele is.
Yeah, who's his,
Probably
where's
already
his
have.
book of clients?
How did he find those people? How did those people find him to book that out? Because it may be something where there's still a lot of money left on the table there,
Mhm.
right? Like it hasn't truly reached its potential from a corporate event center.
Okay,
Great question.
you're more than welcome to write down with me tomorrow.
I'll just tell all my clients I'm gonna cancel their coaching call tomorrow, that'd be great.
Alright,
I think we'd love to
so-
ride with you in a car for a long while.
Numbers that drive decisions. For us, we are a little bit weird, but we syndicated ours, right? So our benchmark was that we wanted it to have a 20% cash on cash return. So that was our benchmark that we were looking for because we syndicated ours. Yours might be different. When I did my cabin at Patoka, my benchmark was basically, will it pay for itself and can I still use it? And I don't care if it makes any money, I just wanna be able to use it and have it pay for itself. So that was a totally different benchmark, right? So this is a little bit subjective depending on what you want out of it. But these are your three main levers to look at. So your revenue projections, what's your vacancy rate, what's your nightly rate, those are really important. And what does the seasonality flow do? Occupancy estimates, don't use best case scenarios, right? This is why we always do everything conservatively, because we want it conservatively making our numbers and meeting our numbers. And then seasonal pricing, separate them all out and see, we know basically from November through February of every year that that's gonna be low for us. We make all of our money basically from March through October.
Yep.
So half of the year, we're barely making expenses or we're having a loss, and then the other half of the year, we make more than enough to pay for the rest of it, so
And
far.
that's across the board based on all your units.
Yep.
That's just the
All
norm.
9 of
You
ours.
just have
I
like
mean,
one.
every year seems to have a property that's a one-off, but if you look at the 4 years of doing this, that's true. There's always gonna be that's always the case, there's always that seasonality.
The majority of the properties are then one LLC and you can just keep one bank account and everything. How do you
All of ours
work
are
it?
separate.
They're all separate?
Every
Cause they're
single
all
one.
its own business, right, it's all
Yeah.
a syndicate, each one's a separate syndication.
Okay.
Cause we bought them one at a time,
Okay.
right, so that's a challenge.
That is a challenge, it's gonna cost you at the end
Well,
of every year
yeah. It is and it's not, cause there are a lot of systems that we can operate across all of them and just divide the cost, right? Whereas if we just had one, it would be really expensive to run a hospitable per night versus having hospitable spread out over 9 or 10 properties, right? We'll get to that, what that is. Alright, so estimating revenue. We've talked about all these things already. We talked about nightly rates, we talked about occupancy. I just kinda wanna put it all together. So, when we're looking at the data, the two most important things are nightly rates and occupancy, okay? And again, let me be clear, events and tourism, like Derby and, concerts, we consider those buffers. We don't factor those into the numbers, right? So I'd rather just find out what the base nightly rate is, and then what is the average occupancy in that market for all properties, and know that we're gonna operate this at a higher level of efficiency, but I'm still using those base numbers, right? If it's profitable with those base numbers, I know we can make money because of Derby and the concerts and other things, right? So that's kind of like, if you just went with these first two items, this is gonna protect you, all right? If you start factoring in events and local tourism, you're gonna hurt yourself, okay? Cause if that's what it takes to run your numbers, like, remember I said earlier, like, one year we didn't book out Derby at one of the properties, we were like, oh crap, that's like 3 months of mortgage. Well, guess what, that whole year wasn't as profitable, and luckily I didn't count on that for that to pay the mortgage, right?
Right.
So I don't count on the extras. The extras are always icing on the cake, right? And when we've done this as a syndication, as a group, to investors, we always tell them, this does not include those extras, right? And so I don't think you should include it in your numbers either, to be safe. All right, I'm moving on apparently.
Yep.
So, okay, I guess we're running out of time. But I did wanna say something interesting about that last slide. Remember I mentioned like Sarasota County was 90% roughly occupancy. Here we're 55%, but Sarasota has kind of stayed true. What's changed in Sarasota is there are still a lot more Airbnb listings than there were 5 years ago, right? It goes up every single year. So you have to see a negative trend on total listings, all right? But the occupancy remains steady. I'm telling you, I've done research on probably 200 homes now, between 400,000 and about 1.2 million in those areas in Florida. 400 to 600,000 with the occupancy I see in those areas does not make you money. All right, a $400,000 to $600,000 house, what you get for the nightly rate and that price range home does not make you money. I have to buy in Sarasota between $900,000 and $1 million because that nightly rate that I can get for that house actually makes money. Does that make sense? Because at that price, I get extra amenities, which means I charge more money. I get the heated screened-in pool. I get the park-like setting. I get the proximity to the ocean, to the Gulf of Mexico, more so than I would if I bought a $600,000 house. I'm usually 15 minutes away instead of 5 minutes away. I'm in an HO, the house isn't quite as nice. It's not quite as big. It may only sleep 8 people instead of 12 people. So what I can charge a nightly rate for a $600,000 house, the numbers don't work, at least for what I wanna do. And let me be clear, what I'm trying to do is rent it out 50% of the time, kinda like your model at Patoka Lake. I just want it to pay the bills, so that Tracy, my wife, can have a place to go stay for a couple months out of the year if she chooses to, okay? That's all I wanted to do. I don't wanna make $100,000 on, that'd be nice, but I'm not buying that for that reason. I'm buying it to have a second home that pays for itself,
Is that a
okay?
DSCR type, a deal that could be done
Yeah.
easy enough?
Yeah.
Based on future income?
Yep. So, but I have to, I mean, it's ridiculous that I would have to go up to 900 to 1 million in order to get to those numbers that would qualify for a bank loan. So, but, so don't just look at one market and say, hey, a $200,000 house is like a $400,000 house, is like a $600,000 house. That is not true. You have to, all the numbers will change, occupancy will change, nightly stays will change. So you really have to understand the different price ranges and what they offer for what you can charge a
And
nightly
if
stay.
one area is 90% occupancy, you have a lot of competition, so you better be dialed in to what is going to make your listing
That's
stand
right.
out. That's why when you look for any property near Orlando, you see all of these giant houses with all of these Disney themes going on, and some are Marvel and some are whatever all the things are, and that's because they're trying to make their house stand out.
The last number that I looked at for Gatlinburg, Tennessee, over 20,000 short-term rentals in that market.
Would it be fair to say, would it be a fair statement your clientele on that $600,000 house versus that $1 million house is gonna be substantially different as far as,
Sure.
more corporate?
No. More combined families potentially,
Okay,
right? Two families come together, combine their income, take a
Share.
vacation together, right? We see more of that. That's what we see here locally too with the bigger houses, right? We see combined stays, right? So I don't know this more corporate. I think in that area, like Anna Maria Island, when you get to the $4 million range, $3 to $4 million range, and you're on the water, then yeah, you're getting to like a $10,000 a week stay, $12,000 a week stay, and that is more corporate.
Or
Let me-
events, like
let me
people
re-
who are booking their wedding to have at a small
Yep.
wedding at the house or something
Yep.
like that.
let me rephrase that statement. Not necessarily more, corporately, but a better class of people for.
Executive tenants.
People is gonna take care of the credit,
Versus-
not destroy it.
Walmart tenants.
Yeah, okay, we're all
Does that
saying the
work?
same thing, we're not on recording.
Alright, deal analysis, so, similar to what a long-term rental would be, right? We have gross revenue, platform fees like Airbnb, Airbnb,
It's a lot more now.
what was it?
It was 3% for
Yep.
Airbnb, it's now 15% unless you pass that on to your consumer.
Yeah,
So,
so they changed all these rules.
What's
Right.
15%?
Airbnb platform fee.
Just, really?
Yeah.
So they will charge it to you as the host unless you pass it along to your client now. Now Verbo is still, I think theirs is 6%.
Closer to like, yeah, 5 or 6%, yeah.
Yeah. So each thing is separate, which is why more people really try to get repeat guests to book with them directly instead of going through the
Outside of the
platform,
platforms.
because if we have a long-term stay, they book it with us directly, we make 15% more money just by doing that instead of having to go through the platform.
So your gross revenue is what you charge for your nightly rate, right? So you charge $100 a night, that's your gross revenue. You're gonna pay a platform fee, 3%, 5%, 15%. Whether you pass it on and bump up your nightly stay to cover those costs, that's up to you. Property management, start at 20% and goes up. If you use Evolve or Vacasa, it's probably 28 to 35%, depending on the
Really?
market, right? So
Does
property
Airbnb ever
management's a
kick
lot
you
more
out
expensive.
because you're going outside of the company?
Oh yeah, for sure, if they catch you, 100% they
They'll
will.
ban you.
But there are other companies.
You can't, you're not supposed to be able to pass your phone number directly to the
Yeah,
guest.
they-
You have
they
to
pretty
communicate
much-
through the app. And if you try to, we've tried multiple times, and sometimes people are just thick-headed, they don't get it. Call us, there's a number behind the refrigerator, go look at it or something. And it doesn't always work, so. But property management fees are a lot more expensive for this versus a long-term rental. And generally, you get what you pay for to a degree. I mean, Evolve is gonna also market your property outside of Airbnb. They'll certainly use those platforms, they'll even use like hotels.com to market your property if it makes sense. Utilities, supplies, internet, Wi-Fi, you're gonna be responsible for everything. The guest's not paying anything like they were for a long-term rental. But a midterm rental will be the same thing, right? Insurance, taxes, your mortgage, all of that subtracted from your gross revenue, of course, should give you your cash flow. Cleaning, we don't have cleaning on here. So if you charge $100 for cleaning or $200 for cleaning, it's based on the size of the property, right? If they have a hot tub or not, or if it sleeps 20, if it sleeps 8, there's gonna be a different cleaning rate.
When you only had a couple, how did you get your cleaning people?
Oh man, that's on one of these other
I
slides.
think that's one of our
We're-
deep
we're-
dive
That's a big
ones.
challenge. I love that you brought that up. We're gonna definitely talk
One of
about
our
that.
biggest
What's the
ones.
question? I didn't hear you.
Cleaners,
Like, how do you get your cleaning person?
unless you wanna be the cleaner.
You just talk to me.
Now, I don't think we have a separate slide on just cleaners, but
Well, let's talk about it real
that
quick.
was one of our biggest challenges.
So if you're in Florida, if you're in Gatlinburg, there's a whole industry dedicated to cleaners, right?
Well, I bet, yeah.
Right? To day, like hotel cleaners,
Right.
right? So, and what a hotel cleaner costs versus what someone that costs in our market to come clean your house, completely
I
different.
bet.
Right, we tried to go up through outside companies when we first started doing this, and they wanted like $350 to clean it. I was like, well, we're only charging $150 for the place to stay a night. We can't charge a $350 cleaning fee.
Right.
So that was a challenge, because we had to find people
Yeah.
that were willing to be available 7 days a week, and had to get everything done from like 11 to 4 every single day, right?
Yeah.
They gotta go in and turn everything, and you have to have 2 sets of all of your linens so that they can wash and then reset everything while everything's washing and drying,
Right.
right? I don't know how many times we've been called into a failed wash machine or a failed dryer, because that's important for the business to be able to function for the next day,
Right.
right? So, if you're in Florida, there's a whole thriving industry of cleaners. So it's not, I won't say it's easy, but it's easier. Like, we did a panel 3 years ago with some people who all had properties in Florida, and they just looked at us like we were crazy. We don't have a problem with cleaners at all.
Yeah.
We get cleaners, we get so many cleaners at such a great price down there. It's because there's so many Airbnbs to clean.
Right.
But here, not so much.
Because all of the cleaners here are used to regular household cleaning rates, so we basically had to build a bench of cleaners who were
Yep.
willing to clean for $30 to $35 an hour,
Yeah.
which is kind of industry standard around here, but they also had to have the availability to be
Yeah.
called in any day of the
Now
week
there's
to be able
tools.
to do.
Like,
Yeah.
we use Turno, right? We still use Turno?
Yes,
Okay.
we do.
We use Turno, which is basically a platform where cleaners that want extra jobs can sign up on that platform, and when we have a stay, it goes out to our regular cleaners first.
Yes, it'll like blast it out to all 6 cleaners or
Yeah.
8 cleaners, and then they just pick up the ones that they want, so that's been a game changer for us. And then if we get into a really bad pinch, then we can also blast it out to any other cleaners and like accept their rates for the area if we get really in a
And a lot of the tourist areas also, especially the ones that require like a weekly stay, the checkout is never on a Saturday or Sunday. So the cleaners don't ever work weekends.
Right.
It's a Monday through Friday industry, right?
Yeah.
So that makes it a little bit easier, but here, we have nightly
Almost.
stays like a hotel.
Yeah, almost all of our checkouts are on a Sunday.
Yeah.
Really?
Which means we want it to be available for Sunday night to check in, so cleaning's done on Sundays.
Are there any bonding requirements from those cleaning people or companies?
We just have a lot of them.
You
That's
have-
it. We
you
just
have
have
a
a
lot.
lot of them.
If you want binding requirements, you're gonna
No,
pay.
bonding.
Well, yeah, but you're gonna, you're talking about
Bonded
if they do
insurance.
damage or something like that, insurance.
Yeah,
Nope.
or
We're
some-
just happy to have them clean.
Okay.
So.
We had one cleaner steal some stuff one time.
Wow.
Jeremy and I did, yeah,
Yeah.
so,
How
on
many-
431.
How many hours do they usually clean on like a 3-bedroom or something like that?
They should be able to get done in 2.5 hours.
Okay.
If they're taking 5 hours, they're just not concerned about their time,
Yeah.
alright? But you can get in there and turn it pretty quick,
Okay.
if you have a system.
Right, you
And a
have to have a
checklist.
system,
A checklist.
for sure, you have to have doubles of everything. Because if they've got a same day check-in and check-out, they have to be able to have it completely turned in 4 hours, so they have to be able to put new stuff on all the beds and possibly take laundry off-site if possible.
Mhm.
So,
Have you ever had to clean it yourself?
oh yeah, oh yeah,
I'd
many
love to be a
times.
part of that conversation.
Last weekend at the Big Victorian, we had 3 sets of cleaners and Sarah because they made such a disaster.
They destroyed it.
So,
So it was one cleaner set up, and then Sarah had to come over, and she called in 2 other cleaners to help take care of it. We had to pay $350 for the cleaning, instead of our normal like $175. Yeah.
so, but basically we base it
It doesn't
on
happen, it's not the norm, but it can happen, you have to be ready for it.
ours we base on a 3-hour clean at around $30
Now,
an hour.
I know like Amy Dixon has 2 Airbnbs, and she intentionally, if she has a stay, she blocks it out to the next day.
Yeah.
And she's her own cleaner, or she pays one of her kids to clean it. So, but she's also not in a rush,
Yeah.
she's taking her time, but no one's gonna check in that night. As soon as someone books it, she blocks out the next day. That's just her system, alright? We, because we're running this more like a business, we are thinking it more of lost revenue. We
Yeah.
don't want that lost revenue, so we're not gonna block it out in order to make cleaning easier.
Right.
We have to operate like a hotel,
Yeah.
alright? Check in at this time, check out this time, check in at this time. Everything has to be done during that time, that window of time. Does it make things more complicated? Yes. Does it make things more profitable? Yes.
Yeah.
Right?
Alright, so quickly, other investment cost in a short-term rental. You'll have a down payment. If this is a second home or investment home, you are not going to be able to get it for your 0 to 5% down payment, so you are gonna have to pay investment property price on it. Make sure you work with a lender that knows what they're doing and knows that it's an investment property, because we run into issues with that. Furniture and design, most of ours are around that $15,000 range to be able to set up, do the design, decor, fully furnish it, order everything that we need. We've got our whole Amazon wish list basically set up, so we can just hit click and order if we have a new one ready to go. And that's about $7,000 of just the, like, pots and pans and sheets and towels and all that kind of stuff. That's not even including
Base
the
order.
big major beds and furniture, couches and things like that. And then if you have any renovations that you need to do, again, like a little bit of paint goes a long way. A little bit of decor, bringing in a stager to kind of give you an idea of what could set yours apart, it goes a long way towards profit. And then setup cost, smart locks, ring cameras, professional photos. If you have any of these other sites that we use, like Turno, Hospitable, Price Labs, anything like that, those are all per month fees as well. But they are well worth it if you are running it like a business or have multiple ones to run. Alright, and then also required cash reserves. So this is probably what some of the biggest mistake is not having reserves set aside for your short-term rental. So when we started all of ours, we started with 6 months in reserve of at least the minimum of rent and utilities. Because if it weren't to book, or like I said, we have that kind of 6-month slow season, 6-month busy season, you need to have the reserves to cover the slow season. And then repair and maintenance fund, especially if we're buying a house and we know that, hey, everything's working right now, or the roof is okay right now, but it's probably gonna need to be replaced in the next 5 years, then we need to build that into the cost as well. And then plan on a little bit of time for it to take off. So when we built the syndications, we said, hey, we need
6
probably
months.
3 to 6 months for it really to build up enough reviews. Minimum on Airbnb is 3 months with 5-star reviews before they're gonna make you a super host and then push your listing to the top.
And you still need like 30 reviews in those 3 months.
Yep.
So it needs to be, if you launch it during a slow season, you might not get 30 reviews in 90 days.
Yep. So worst thing you can do is like buy it in the fall and then get it all the way ready to launch right in January, because then it's just gonna sit. So your best time to buy
At
is
least in this area.
probably January, so you have 3 months if you're needing to do repairs and get it ready, so it's ready to launch in the spring right before busy season.
Some other costs to consider.
Or did I skip that?
And acquisition, finder's fees, the way we structure our deals, if an agent or somebody brings us a deal, we're gonna pay them a finder's fee. If it's an agent that found the deal and there's a listing, a buyer agent cost in it, we're gonna probably pay that fee on our side to control the cost for us. Closing costs, of course, we all know what that is, prepaids, appraisals, inspections, things like that, HOH2s, and then property management. Again, we got in there 15 to 25%. A really good property manager is most likely gonna start at 20%, alright?
Alright, and then finally, just again, they can be very profitable, but treat it like a business, not like a hobby, right? So a lot of people just really like the idea of playing house with one, and you can get yourself in trouble with that. So treat it like a business, and make sure that you understand how the hospitality industry works. Cleaning, and guest experience there are really, really important. We've already talked tons and tons about research. You know, do your market, do your data, do your numbers. So that's basically 1 through 4 is do the research, know your stuff. Alright?
Questions? Yes?
So doing the research would actually be useful if I wanted to find one, and get a finder's fee. I would imagine, like figuring out the market.
Yeah, cause I mean, if you find one and you have clients that wanna buy an Airbnb, yeah, you can
Are you
charge
guys
them.
still buying Airbnb?
No.
Oh. Okay, well, it won't be you.
Both years.
No,
Oh, okay.
definitely not.
So you're voluntarily on hold.
But there are quite a few
Or
investors that are
Momentarily
looking for
forever in
Airbnbs.
finance. I am looking in Florida, but, yeah, I wouldn't trust any of you all to find me one in
Oh,
Florida.
yeah.
No offense.
I'm not offended.
I already have an agent in Florida working on it right now for me.
But there are a lot of investors, even if you just join the like Kentucky or Louisville investor market, you'll see people in there that are looking for short-term and mid-term ones for investor clients, so
Yep.
it's still worth it to like run the numbers and find out. But like we said, New Albany's got a moratorium, I don't know if Jeff does or not, so.
Jeff has a list you gotta sign up for, there's no moratorium, I researched it last week when someone told me about the moratorium on New Albany that we didn't know about.
Yeah.
So, do you not like to do them anymore, or what's the reason why you don't wanna get any more of them?
That's a great question.
Yeah.
It's not as profitable as we had hoped it was gonna be because of the level of competition there is right now, right? So the market, so in our market, and I think this is true everywhere, right? Our area, same thing when I go to Gatlinburg, it depends on international travel way more than we think of it locally, right? Now, we track every guest that stays by their name, and we get a lot of foreign travelers, we have in the past, right? The current climate in our country is not conducive for international travel, right? So we've lost a lot of those international stays. And I think that's where we've lost, in this area, that's where we've lost most of our occupancy. It may only be like 20 or 30%, but it only takes 10 or 20% to knock you out of profit,
Right.
right? And so I think that's true. I like to go to Gatlinburg once a year and climb the Smokies. And I've noticed a demographic change in Gatlinburg, Tennessee, to where I don't see the foreign travelers as much as I used to. And that's gotta be killing the Airbnb market there, right? So for that reason, and I've told the team this, for that reason, this isn't a good climate to buy Airbnbs that attract a lot of international travelers. Cause the industry's not built for that.
I would say also, probably more from our perspective, is how we're running it as a syndication. It's a lot of noise and a lot of work on our part when we're just getting a piece of it. If we were the owners straight out and getting all of that profit back in our pockets, it might look a little bit
Well,
different.
so I am an owner on 2 of them with a small group of people, Jeremy's dad, Dusty, right? And we were making $30,000 net profit the first couple of years on 3-bedroom, 2-bath home, right? I think our worst year in the first 3 years was $19,000. Now we're more like $11,000, $12,000
Really?
net profit, right? With a lot of potential headaches,
Yeah.
right? So it has become less profitable as the area has increased in the number of listings,
Yeah,
the number of
saturated.
Airbnb listings,
Yeah.
right? So it just has me, if I was to buy one today, it would be that I could live in for a few months. I'd buy a lake house or something like that.
Okay.
I'd buy one in Colorado in the mountains, but more for my enjoyment and less as a business, right? What I've learned from running these systems though, is that's very possible still in this world, still in this market. If you wanna run this as a market, here's a book that I'd recommend. All right, Avery Carl, she lives in Nashville, Tennessee, or at least she did at the time of writing this book. All right, here you go.
Oh, thanks.
She operated, when she wrote this book, she was bringing in about $500,000 in net income off of 30 rental properties in Gatlinburg, Tennessee. She lives in Nashville, which I think is about 2.5 hours
Yeah, it's
apart.
not very far, yeah.
Yep, but she managed them from Nashville, not from Gatlinburg. She paid a team to do all the work in Gatlinburg, and her husband bought the properties. And, you know, it was bringing $500,000. This was before COVID, all right? Or maybe right as COVID came into our world, right? Someone gave me that book probably 3-4 years ago. It's a great book.
I would say if you were already planning to build wealth by owning a lot of long-term rentals, like you wanted to have 50 long-term rentals in your portfolio, there wouldn't be any reason why you wouldn't also wanna consider short-term rental in that portfolio, as long as you were willing to run the system.
If I was an investor, you gotta go?
Yeah, but I got one thing to say. I was in Airbnb, I got out.
Yeah.
Long-term rentals, you have a long-term person, you're getting calls from one person. Short-term, you're getting calls from multiple people about problems they have. I don't wanna sit, and that's why I got out. All the phone calls I had to put out.
Right, but.
And I've had plenty of rentals, long-term rentals.
Yeah.
But having the right property manager takes care of that problem.
It probably could, but I didn't have enough, I only had 2 properties, and that's, you know what I mean, it's, so.
Yeah, they're leaving anyway, so that's okay. All right.
I'm good to set the board, I gotta stay for another minute to watch the board.
Are you seeing major corporations, becoming your competitor, like in the rental business?
I feel like most of short-term rentals right now are either the mom and pop who have one next door, or their vacation property, like what I do with my cabin in Patoka, or they're the big conglomerates that run everything. There's
REITs
not
and
as
things of that
many
nature.
people like us.
You know, that's
that run.
interesting you say that. However, so I've stayed at Airbnbs out west, in Gatlinburg, in other parts of Tennessee, in Florida, in Austin, and I have yet to rent one from a conglomerate, an LLC. It's always been a mom and pop, always. And I mean, I've stayed at 100, 150, yet to stay in one that was owned by a conglomerate. All right, now I have stayed in some in Gatlinburg in a condo association that was managed by Vacasa, but it was owned by someone that lived in Tennessee. So
I'm really surprised at it.
yeah, I am too, now that you mention it, but thinking back on it, I've never dealt with somebody that was a big corporation.
Yeah, like, Main Street or some REIT or something like that.
Yeah. So here's the way I view what Chris was saying, okay, and the challenges that I have as a real estate professional. This is the center of my world. Airbnbs,
Is it dead right?
They're all pretty dry, aren't they?
yeah, they are. This is an ancillary business, right? Like property management. This is ridiculous, sorry. So, when real estate is everything, and I've got all these extra distractions, the distractions they're not as attractive. If I put STRs here, and that was my only business, honestly, I would enjoy it. More so than long-term rentals.
Okay.
Because I like the vacation aspect of the rental properties. That's just me. I'm a traveler. I like interacting with those type of people. I would rather have 30 of these than 100 of the long-term rentals.
Okay.
That's my opinion. I probably make more money, but that is a full-time job, and I would have to still have leverage if I had 30 of them. I'd have to have a team of cleaners, a team of maintenance folks, just like I would need people over here too, right? if I'm doing it for myself, even if I had a property manager paying them to do it, when it's not the center thing that you do, the most important thing that you do, it is a frustrating distraction.
Yes.
You agree?
Good way to put it.
So-
That's a very good way to put it.
Yeah.
Okay.
So, but I
So
think
your
that's.
flipping business is your majority of business, and then
And
that's
still
your
frustrating.
feeder, yeah. So maybe just have one for a vacation park like you were talking about before, or.
You gotta be highly leveraged. I'm way more leveraged in this business than Buffy, because I own a specific skill set, which is the figure out the numbers of problems,
Yeah.
in the business. I don't have to think about the day-to-day stuff unless there's a problem
Yeah.
that involves the numbers. True? So it's different experience for me than it is for Buffy or Jeremy or Angie. Angie's doing our bookkeeping, Jeremy is taking care of issues
We all
with
have
property.
different roles that we play, and Rob's basically, his is the numbers on the front end, so he's not as involved with it. I'm the
Right.
one that helps Sarah take all of the calls and
I don't see any of the
manage the
calls.
problems,
Yeah.
and
Yeah, so
that's why I'm like, sell them all, once
How many do you have then?
9.
I was gonna say, it couldn't be much more than a handful,
Yeah, but it feels like a lot,
does it?
right? Yeah, so.
Go ahead, Lauren.
So I used to clean an Airbnb in Jeffersonville, and there were a couple of problems with it. One was that at one point there were a lot of ants in the kitchen, and then at another point,
Not yet.
well, actually through the whole time, he had the manager had taken the vent off the